pretty much exited at the apex there. And if I zoom out a little, you can see if I just left it alone, I would have been okay, and I would have actually made more money because my average is this line right here, 33,391, and you can see a lot of these below that, which we would have made money. But that's hindsight trading. I know it's not how you're supposed to trade, but it's human nature to think about it. In reality, you can only look what's in front of you when you're trading. So hey, how's it going? It's Rocky. Welcome to week number 19 of the Diaries of an Average Futures Trader, where I go through my journey in the year 2023 of surviving trading the futures market as my main source of income. So what I have up here is the YM, which is the Dow Jones Industrial Average. I exclusively trade this index as opposed to trading the S&P 500 or the NASDAQ, where most of the people like to trade that. But for me, I have pretty much been trading this for a few years. I have familiarity with it, and basically with the volume and the speed that it goes, it suits more of my style. So on this week, just based on the volume here, just going through the charts, Monday and Tuesday was a bit muted. You can see based on this blue histogram, the volume is a lot less compared to the others. Wednesday was when the CPI report came out. So that's a economic report that is used that will decide what the Feds will do as far as interest rates goes. And then on Thursday, the PPI report came out. So that's why all this choppiness occurred on Wednesday and Thursday. Another word for choppiness, I guess, is volatility. And then on Friday, I think a lot of it was just the debt ceiling that's coming up. So most people don't really know where they want to go. The White House and the congressional leaders were supposed to meet on Thursday night right here, but it was delayed to next week. So I don't know if that had something to do with it, but it has definitely affected the way I traded, and that's why it wasn't such a great week for me. I'm gonna turn on just to show you where my trades are with these lines here. I actually had two really big losses on this where I was shorting and it didn't go my way. It was pretty interesting that occurred because, this is the second week that the Dow is down. I was just not seeing the market right. It's a pretty tough week. It happens. Has nothing to do with my strategy or how I do things. It's just one of those that you need to accept as a trader, because when you have weeks such as these, and I'll go through the results and go through what my losses were like, it doesn't help to go back and blow everything up you've been working on, your systems that you've been working on for months, weeks, or years. Sure, you can go back and tweak it a little bit, but it doesn't make sense to start from scratch. But I had two major losses here on Wednesday, right here. I basically put this oval shading here just so I can go back later to understand what happened. And then had one prior to today, Friday, during the EU. I stayed up late, and I'll go through exactly how those trades turned out. Won't so much go through what my entry or exit was. I'll just go through what the losses were for those two trades. So the first loss that I'm going to talk about occurred on Wednesday. This is when the CPI report came out. You can see that Europe actually reacted quite well to the CPI report because it showed that the economy was slowing down, which meant in theory that the Federal Reserve won't be increasing the rate as much. And you can see that data comes out at 5:30 in the Pacific Coast, and that's why it went up a lot here. However, it was quite surprising how it reacted right when the market opened here at 6:30. You see the flush right here, and then that continued to flush until about 10:35 in the morning. And then some sort of recovery was occurring here. And at that point, I think, with my bias with it, I was like, there's no way that you would recover quite that amount. And due to that, I think, just the thoughts, trying to think of it in the macro way, That's what affected my entry a little bit. Again, I'll go through quickly on the indicators, but based on the indicators, it's not when I would normally short on the time-based side. On the tick-based side, perhaps just a little bit, an aggressive entry, but my average for this trade here, I entered first with 2 contracts, followed by another 2, and then another one. So a total of 5 contracts. And the average of those 5 contracts was 33,488. And you can see I did not exit until 33,640. And that's the white line up there. So you could say it's a moment where I froze. You could, yeah, no excuse. It just happens. Let's just put it that way. I'm owning it. It's just a mistake that I had. So this is the time base side on the left. I'll look at the tick base. It's a lot cleaner looking at it here. I actually did have that opportunity to exit, but I did not. But let's bring the calculator here just to calculate how much this loss was. So pretty much I shorted at 33,488 average, and then I covered at 33,640. So that's negative 152 points, and I traded with 5 E-mini, where one contract of E-mini per point is $5. So with 5 is actually 25. So multiply that by 25. That one trade right there, I gave up $3,800. So that was a tough one on trade number 1. So the second significant loss that I had today on one of my shorts occurred during the European hours, the Globex, and it occurred today. Well, yeah, today, Friday, is when it happened. And with this one, I'll go through it again. No excuse. I think I saw something at that point, and I was just not quick enough to pretty much exit it. You can see here I shorted 6 contracts. Just normally I try to do it in steps, right? I do 2 2 2 or a combination of 1 2 or 3 contracts to the maximum that I'm allowed. But with this one, I guess I had just a conviction somehow, some confidence that I was right, and that's a problem, right? Because I'm not helping myself probability wise, because I should really allow myself to be wrong on that first move and be able to correct it. But that's a mindset I try to go back and forth with. If you look at the indicator, we're on the oversold side, so that's what I like when I enter. And it was diverging a little bit after the crossover, but we were above the 0 line on this one. If you look at the tick base, at that time when I did enter, I believe I was seeing something similar to. That's why I had that confidence, that conviction to enter it. But this got pretty tricky. This I entered it around 11 o'clock at night. I went to bed, and that's the big mistake there. Entering with such a significant amount right before bed, and then woke up around 2 a.m. at the peak of it, half awake, bad decisions. I exited it. I pretty much exited at the apex there. And if I zoom out a little, you can see if I just left it alone, I would have been okay, and I would have actually made more money, because my average is this line right here, 33,391, and you can see a lot of these below that, which we would have made money. But that's hindsight trading. I know it's not how you're supposed to trade, but it's human nature to think about it. In reality, you can only look what's in front of you when you're trading. So I wouldn't say it's a rookie mistake. It happens to the best of us. And I will bring the calculator here just to calculate our damage in this one. We shorted at 33,391, and we covered at 33,528. That was negative 137 points that we gave up there. And it's 6 E-minis, where 1 E-mini per point is $5. So times 6, that's $30. So if you multiply it by 30, I actually gave up, at least $4,000 on this one. So those are the 2 trades that really messed up my week. But it happens. It's just trying to keep my losses to a minimum because it could have been a lot worse. And we'll go through exactly how we did on the account statement. So here is the account statement, just to go through how we did for the week. This transparency helps me just to hopefully show you what a journey is like for someone like me who's now doing this full time and not a professional at all. I'm an average futures trader, as I like to say. It's the diaries of an average futures trader. Just this transparency I want to show because it helps me, because this is my journal, and hopefully it helps you one way or another. So I'm recording this May 12th, 2023. It's 4:17 p.m. in the Pacific Coast, and the statement I'm showing here started on Sunday, May 7th to today, Friday, May 12th. And just going through the description here, just gonna go through here. I'm doing this just to point out that I did not make any deposits and withdrawals to the account. However, if we do go on our balance here, we started at 37,000 ish, and just going through it, actually started the first 2 days right, up to 38 or up to 39. So it was a good first 2 days for me. And then when the CPI report came out, that's when it got tricky, where I got down to 34,000 and then recovered a little bit of it and then kept going down to 32,000. And then just, what occurred the night before on Friday got us all the way down to 28,000. So it's a pattern. It's a funk that I'm going through. This is the third week where I'm going through this seesaw on trading, a bit of a rut, but I know I can get out of it, and I'm doing my best to keep my losses at a minimum relatively, because what's important when trading is your capital. As long as you have capital to keep going, you'll be fine with this journey. So happy that, from being low to 28, I was able to recover that all the way up to 32 today. And then like what I mentioned with those two trades, that's 7,000 that I lost there. If I did not make that mistake, then this week wouldn't have been so bad. But it's part of the strategy that I'm doing, where I'm hedging myself. So I'm controlling it in a way. So let's bring the calculator here to calculate exactly how we did for the week. So our ending cash is $32,368.96. And our starting cash was $37,731.74. So for the week, we gave up a significant amount. We gave up, negative $5,362.78. So for the year 2023, where there's been 19 weeks, this is actually my 6th red week. It's 2 weeks in a row that we are in the red. And out of the past 6 red weeks, percentage-wise, let's see what this loss was. So with a loss of $5,362.78 divided by our starting cash, which was $37,731.74. Let's multiply that by 100. This is actually a loss of 14.21%. So to me, that's a pretty significant percentage as far as losses go. Out of those 6 losses, this is actually my 4th worst ones. So yes, I've had 3 other weeks where it was more worse as far as the losses go. One of it is up here, putting a link up here. And then for the other big losses I think I had one on week number 10 where it was just so bad that I didn't even have the courage to be able to share what that loss was. But year to date, I'm going to be transparent. I'm still in the red. I'm hoping to get back in the green soon. We are pretty close to that. And once that happens, I'll definitely go through how my year has been going. Anyway, that's my journey. It was definitely a tough 3 weeks, really. And I'm hoping to rebound next week. And next week will be interesting because of the debt ceiling that's occurring. Another volatility to the market. But volatility is really how you make money. So don't confuse risk with volatility. They're very different. As long as your risk management is good, then you should be able to handle any volatility that goes up or down. All right, thank you for your time and following me on this journey. I hope you like and enjoyed what you saw today. If you didn't, give me another chance, and hopefully you'll like what you see on the next one. All right, y'all have a good one. See ya.